Gold prices climbed during Asian trading hours on Friday, continuing the momentum from the previous session. This rise was prompted by strong U.S. inflation data that was partially counterbalanced by a softer labor market report. Concurrently, industrial metals, particularly copper, experienced a significant increase, driven by anticipation surrounding potential fiscal stimulus measures from China. Spot gold saw a notable increase of 1.4%, reaching $2,645.60 per ounce, while gold futures for December delivery also rose by 1.4%, trading at $2,660.50 per ounce as of 0:41 ET for 40. Despite these gains, gold prices remained well below their recent highs, reflecting mixed market sentiment regarding the Federal Reserve's monetary policy. The positive movement in gold prices was influenced by the latest Consumer Price Index data, which indicated inflationary pressures within the U.S. economy. However, this inflation data was somewhat tempered by labor market statistics showing a larger-than-expected rise in weekly jobless claims. The labor market's softness is anticipated to provide the Federal Reserve with additional justification for reducing interest rates in the near future. Following the release of the jobless claims data, the U.S. dollar weakened from two-month highs, which contributed to the rise in gold prices. Market participants are now pricing in an 81% probability of a 25 basis point cut in interest rates during the upcoming Federal Open Market Committee meeting in November, according to CME FedWatch data. Although expectations are for a slower pace of rate cuts by the Federal Reserve, the prospect of lower rates is generally favorable for gold and other non-yielding assets. Lower interest rates diminish the opportunity cost of holding gold, making it more attractive to investors. In addition to gold's ascent, other precious metals also showed gains on Friday. Platinum futures increased by 3.2% to $987.85 per ounce, while silver futures rose by 2.9%, trading at $31.56 per ounce. This recovery indicates a broader bullish sentiment in the precious metals market as investors react to the shifting economic landscape. In the realm of industrial metals, copper prices rallied sharply. Benchmark copper futures on the London Metal Exchange increased by 0.9%, reaching $9,772.50 per ton, while December copper futures rose by 1.3%, trading at $4.456 per pound. This surge in copper prices comes after the red metal faced significant losses earlier in the week, primarily due to disappointing signals regarding stimulus measures from China, the world's largest consumer of copper. Upcoming announcement on stimulus measures. The renewed optimism surrounding copper prices is closely tied to expectations of fiscal stimulus from the Chinese government. China's finance ministry is scheduled to hold a press conference on Saturday to unveil plans for additional economic support measures. Analysts are speculating that Beijing may roll out stimulus measures totaling at least 2 trillion yuan, with a significant focus on bolstering private consumption. The anticipated fiscal stimulus is expected to inject much-needed momentum into the Chinese economy, which has been facing headwinds from slowing growth. Increased government spending and support for private consumption are crucial in sustaining demand for copper and other industrial metals. As the market awaits further details from the Chinese government, traders remain cautious yet hopeful. The combination of a recovering Chinese economy and supportive fiscal measures could enhance demand for copper, reinforcing its upward trajectory.